Hello guys and welcome to Daily Market Movements. Welcome to another episode of Industry Watch. In today's video, as always, we're going to be having a look at the S&P 500 price chart and then moving over to the NASDAQ 100. So let's start off with the S&P 500. We're currently trading amongst those all-time highs up at 4,791. So we're pretty much 9 points off the all-time high that we achieved, which was back on Tuesday, I believe. Yesterday was pretty much a flat session. We haven't really done much, but I don't mind that because, we've had that lovely length towards the upside, very steep acceleration here, and then we're just kind of leveling out. So this is something that we might see for the next couple of trading sessions. We might just see a consolidation phase where we just trade sideways, we build this next level, and then a few days later, we then pop towards the upside. Now, of course, we only have one trading session, well, two trading sessions, including the one today that's about to start, left for this trading week. And then, the next session that we will have will be going into January. So, this is typically a very bullish time of the year. It's when you have the Santa Claus rally. Typically speaking, a Santa Claus rally lasts about 2 trading sessions into the new month of January. So I do anticipate to see some more upside here for the S&P 500. Personally, I have not entered this trade. I recently closed a trade in profit when we went up to 4,743. So a massive well done to everyone who's part of the streaming service for managing to capitalize on that trade. But at this moment in time, I do not hold any positions in the S&P 500 due to the risk that is associated with the S&P 500 if I was to go and open a trade up here. Just to the 50-day EMA alone, you've got a 3.5% decline. And I think that this could only really go up towards 5,000 within the next couple of sessions. And of course, that's only really a 2.8% gain towards the upside. So your risk-reward ratio is horrible if you were to enter a trade up at these all-time highs. So wait for that pullback, especially if you're a retail trader. I know that it can be very tempting to look at this chart and say, well, look how strong the S&P 500 has been over the past couple of days. This is a fantastic opportunity. We've been trading flat now for some time. In fact, we even had a bad red day. So I fully anticipate a continuation of this uptrend. Don't be that person who gives into the FOMO and enters here. Wait for the pullbacks. Trust me, they do occur. They've occurred on several occasions. In fact, they've occurred several times. Here, we've had several 5 to 10% declines. There's 1, 2, 3, 4, 5, 6, 7. We've had 7 declines, and that's even when the Fed has been injecting $120 billion of capital on a monthly basis into the financial markets. And of course, the tapering process has just commenced this week, where they will start to accelerate the unwinding of that $120 billion a month. So, trust me, the markets will pull back down towards that 50-day EMA. It just might mean you might have to wait a little longer, or whilst waiting, you might see the market frustrate you a bit and it might go a bit higher, but eventually it will come back down towards that 50-day EMA, down to that downtrend, and this is the area where you want to be entering that trade so you have a good risk-reward ratio. That is my best advice to new retail traders. It's always the small guys who enter up at these all-time highs and get hurt. And I'm trying to help retail traders understand that that's not the best strategy to have. You want to be buying down near these supportive levels so you can open a trade which looks something like this. You could put your stop loss just below this uptrend, and then you'll take profit up let's say 5,000, which is all the way up there. So you're risking pretty much 3% to gain 6. That's a fantastic risk reward ratio of 2/1. But let's move on to the NASDAQ 100. NASDAQ 100, unlike the S&P 500, I still do believe the NASDAQ 100 could go higher within the next session or so. And that's because if you look at the S&P 500, we are trading above all-time highs. In fact, we recently broke above the previous all-time highs. Let's just draw a line there, where if we go over to the NASDAQ chart, for example, we still haven't. The all-time high for the NASDAQ 100 is all the way up at 16,770, and we're still 300 points below that level. So within the next session or two, I fully do anticipate a break above. For those who don't know, I do currently have a position open along with the streaming service team. We bought a few weeks back all the way down at 16,050. With our take profit up at 17,000. 17,000 has been my end of the year target. And with there only being 2 trading sessions left of the week. We would need some rally to get there, but nevertheless, I'm so impressed with the rally that we've seen here for the NASDAQ 100. I think we were just saying yesterday, but from the lows that we achieved back in March 2020, over the past 18 months, we've rallied 150% here for the NASDAQ 100, which is just unheard of. So many people would have become millionaires, billionaires, etc. During this process. So it really has been a great opportunity and a great past 18 months for the financial markets and for investors. But again, if you haven't yet entered a trade, do not be chasing the tops up here. Again, the risk reward just is not good enough. Let's say if you targeted 17,000, well, that represents a 2.9% gain towards the upside, and if we went down to the swing lows, that represents a 6.8, so let's call it 7% decline from current levels. So the risk reward ratio is even worse than what it is over on the S&P 500. So my recommendation would be not to get involved if you haven't already opened a trade yet for the S&P 500 and the NASDAQ 100. But if you did open a trade and you are part of my streaming service and you followed this trade, well, then congratulations, you're already 50% of the way there to achieving the take profit. And I fully do anticipate we will go a little bit higher within the next couple of trading sessions due to the Santa Claus rally, especially as we go into the new month of the new year. And I fully anticipate us to go up and achieve that price target up at 17,000. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.